what's going on, guys? Ace Alfalo over here, CEO and founder of FMO Media. I got my man Darrin here from LoanFi Mortgage out in Texas. Darrin, first off, let's just kick off by who you are, what you're about, and how you got started in the mortgage industry, man.
That's a long story. So we'll start with it. So I'm Darrin Cook, CEO, president of LoanFi Mortgage. We're in Fort Worth, Texas. I've been in the mortgage industry since 1997. So been in it for quite some time. Started with a company called Ford Consumer Finance, which became the Associates, which is now Citi. And that was the original subprime kind of days back at Ford Consumer Finance. But had some years in management at Nation Star Mortgage, which is now Syntex, or was Syntex Home Equity, then Nation Star Mortgage. Now it's Mr. Cooper. They're one of the largest mortgage servicers in the country. So kind of went through the 2007 crash with that company. And that was very interesting. But then had a brief stint, or a 4-year stint. I ran national sales for Equifax, the credit bureau, basically selling mortgage data products, the credit, other products as well. My team sold those to the top 200 lenders in the country. So it was about that time of getting to go with my account executives into these big shops, Rocket Mortgage and, you name it, we went to it and kind of see how their operation ran. And, something I kind of noticed over time was there's a lot of extra expense that's put in with these huge companies. And I think there's a way to run a good mortgage company a lot leaner. So I had some background, obviously, with wholesale mortgage at Nation Star, and decided to start LoanFi in 2018. So launched it then, and been running it ever since, and having a good time with it. I wouldn't, it's especially these days. I think the corporate world just, I actually couldn't even imagine being in it the last few years, probably. So I'm very happy with where I'm at, even in a market like this. It's a little bit different right this second, but it's, when you've been in it since 1997, you've seen ups and downs, and you've seen different types of markets. This one's different though than I've seen. So it's something that you work your way through, and we're enjoying doing it.
Well, first off, Darrin, congrats, for getting your own company kicked off. And it must have been a wild ride, 2018, going into everything we've been in these past couple of years. But yeah, diving into that, especially, you running the brokerage there, and I'm sure, recruitment is probably a big part of what you're doing right now as far as getting other loan officers in the building, or at least it was at some point. Yeah. I wanted to ask you a little bit about that right now, as far as people thinking about getting into the industry, maybe someone who's, wanting to go down that route, what's your opinion on kind of just where the market is, how's that impacting the new mortgage broker or loan officer today?
Yeah, so I think a new mortgage broker, loan officer, it's a big impact right now because, refinances for the most part, there's cash outs that you can still do. And a lot of people have a lot of equity. So you can generate some business that way. But if you're getting into kind of the mortgage industry right now, if you're not going to work at, let's say, a Nation Star or Rocket, in a call center where they provide you leads, I think one of the biggest things you have to do if you want to do what I'm doing and get referral business and really make the phone ring yourself, you got to have some money put away to get it started, because it's going to take a little bit of time to ramp up, or you got to be in that right position. Maybe if you're really young and you're living with your parents, and you get in with a company, with somebody that's going to take the time to train you. Probably, I think the best thing you could do would be get licensed, become an assistant for a loan officer. But if you just wanted to jump straight in and start trying to get business from realtors, it can be done, but it's going to take some time to get built up. So I always, I get questions sometimes on people that may not be a fit here, but I started in call centers, and I think that even back to 1997, the business was a lot different then. But being able to get the volume of deals that come in and being able the experience to work on hundreds and hundreds of clients, I think makes it if you get into it right now and you do your first loan, you may not take much to the next loan. I mean, I learned something new on almost every loan that I do, and I've done thousands of them, right? And so I think in a call center is not a bad place to start, but then eventually try to work your way into where you've made some referrals, you've got some realtor connections, things like that. Work your way, become independent about that along the way.
And what would you say? What would you say? If you can go back to 1997 and give yourself some advice, what would you be telling yourself?
1997. Well, I'd probably be making a note to look at for probably 2012 whenever Bitcoin comes out, and make a note to buy a bunch of that.
That's the best answer I've heard yet. Okay.
I just have a sticky note up there say, okay, hey, 2012. But no, I think advice from back then, it's a good question. I mean, I don't think I would change too much. I mean, I went along with what the I'll tell you the difference in a loan, and these were the first types of loans that I did. And again, this was the beginning of the subprime mortgage days. You had, Terry Bradshaw was doing the commercials for the Associates, and I think Jim Palmer was doing them for the old Orioles pitcher for Money Store. But these servicing portfolios, they just kind of churned these clients. And hell, I didn't really even, I'm learning what I'm doing, but every loan, somebody may have a 5% rate. And, we did what was called incremental yield. So you raised it by 75 basis points, and then you paid 8 points to buy it down a quarter a point for every point. So almost every loan we did had 8 points on it. And honestly, at the time, I didn't even really know what the hell that even meant. I was just like, okay, you're at 5.25, but we're going to be able to get you down to 4%, but it costs you 8 points. And now, a lot of regulations have changed, and, you don't really see loans like that being done too often. Although you are seeing some lenders come back and start charging points because rates have gone up. Some ways to get the rates bought down, that's been happening a little bit. But I think I wouldn't change much. I think that it was good to be able to see that side of the industry, and then that was back when we had, we didn't have email at the time. I mean, you were getting docs faxed in and things like that, and we took handwritten applications over the phone. And so technology's changed so much, throughout that whole process, that it's been kind of fun to see that evolution. But there was some time, even technology challenges, where you got into 2010, 2012, and everything's online. And I'm so used to writing out the information on an application, because everything it was very went in order, and it's a lot different. But I think from back then, it's great experience, and it's just a completely different ball game today. But I think what I've learned over that entire time is I moved my way up into management and ran some different divisions for larger companies. And one of the reasons I started the company was somewhere along the way, as you go up to manager, to VP, to senior vice president, you get so far above kind of the loans that are actually being done, that I think that people in those positions in many cases just lose track of the fact that it's a human that's on the other end of this transaction that's buying a house. And I think that was a problem in this industry. And you go to, when I was at Equifax, we'd go meet with, top level executives from huge companies, and, at the MBA, and we'd be there for, 4 days, and it's just meetings back to back. And, it's just like, just a bunch of guys in suits walking around acting like they know what a mortgage, and they do know, but they don't know back down to the level of kind of what I'm getting experience coming back into 2018. I know so much more, even I think now, after running the company since 2018, than what I thought I knew when I was trying to sell, data products and things like that to executives at Rocket Mortgage and things like that. But just, the evolution of the industry has been pretty incredible. To be able to see it since 1997, go through the ups and downs, make it out of there, and just always have something that is coming up. And now we're in this market today that's I haven't seen anything like this. So normally we're set up to do a great job, I think, in a purchase environment. When rates go up, I'm so much leaner on expense than most of my competitors that I'm in many cases, 50 basis points lower in rate. So, I mean, I'm still hovering around, 4.875 on a 30-year fix. And I'm seeing retail lenders that are at 5.5 right now. So they're charging a point.
Yeah.
So we do real well in a higher rate environment. Problem is we've got a ton of buyers pre-approved to buy houses, but they can't find a house, right? And so that starts getting a little bit scary because the rate and term refinances are dried up. There's some opportunities for cash outs. But I kind of looked at this a few months ago and it was like, okay, let's look at how many people we have pre-qualified to buy houses that we've already done the application, they're ready to go, but they're looking. And I started tracking, what percentage of those buyers were finding a house each month. And it was about, first month I tracked it was 7%. So, and we had, quite a few people pre-qualified to buy houses. It tracked up to about 10%, but now it's up to 25%. So I think with rates going up this last couple of months, it's finally kind of cooling it off a little bit. I still think, an example of that is I'm about to close a loan for a friend of mine that she was in the 275 price range. She was making offers on houses, she'd offer 295 and they would have 47 offers on the house and it would go for 340 cash. And this was happening nonstop. And so I'm like, gosh, in this price range, she's not going to get an offer accepted. She's got 5% down. But, a couple of weeks ago, she had an offer, 12 offers on that house and she got accepted and we're about to go to docs right now. So, and that's in about 2 weeks. So, just complete different market that we're in now. So
explain that, Darrin, for the maybe the person seeing this video or listening, like what is the market we're in right now compared to where we're at? Why don't you, like the dumbed down version of that for someone who doesn't understand?
Yeah, currently we have, I believe you got a lot of demand for houses, but we have a housing shortage. And then you can even, and that's, I think, pretty good and well said around the country. But then you look at Texas, and it's an even bigger deal down here in Texas because I've done tons of loans for people moving from California, for people wanting to leave California, leave other states and move to Texas. You've seen a lot of people move to Tennessee, some to Florida. But you've got that additional demand coming in. You have, really, I think we've been underbuilt for quite some time. And it's just, bottom line, a housing shortage. And so people would say, okay, well, rates are going to go up and that will cool the market down. It's cooled it a little bit, but it's still extremely hot. And I don't really see anything in our future, like in Texas, at least for the next 2 to 5 years, that makes me think that that we're going to have it, that the shortage is going to be taken care of. And as long as there's a housing shortage, I think values are going to continue to increase. And I think with rates going up, that's where you are seeing some of the people that have fallen out of the market, or they may have been looking to buy, but now it's just, okay, you got inflation to deal with these days. They got rates that are higher. They're sitting on a 2.75 30-year fix on their current house, and they may have just said, okay, we're going to back off for now, right? And that is one less house that's going to be on the market to be listed, and one less buyer that's out there to buy. So definitely.
And what do you think, Darrin? And because you're going pretty in depth with this stuff, so you obviously know the market really well in the industry. I was speaking to someone in California, another mortgage broker over there. He was saying how it's similar to what you were just talking about your friend, right? With interest rates going up, and it's kind of thinning the herd a little bit, and it's being a little bit more difficult to qualify for people that are struggling to kind of get in at the entry level, first-time home buyer, making a certain amount of money. And he was like, "Oh man, this is like perfect scenario for the Black Rocks to come in and build and get the renters in, the people who can't afford." And what's your opinion just on all of that? Just 50,000 foot view of like,
to be honest with you, I mean, I read an article, and I don't know the exact number. One of the articles that I read, I can't remember the location. I don't think it was national, but I think 40% of the sales had gone to an LLC in the past like 6 months. So
wow,
that's a huge number. So they're doing exactly what you're talking about. And it's BlackRock. I mean, Blackstone. You got different private equity companies that are out there, investors, and that's another reason why I think values are still going up, because those guys don't typically lose. And I don't think they're going to buy at the top of the market, because that's just not what they do. I think they know what I'm talking about as far as a housing shortage. They know that they're going to be able to get renters in there very easily. Values are going to be able to keep increasing, and they're sitting on good investment. And it's a diversification of their portfolios right now too. So I actually think that it's causing some problems. I don't know the best answer for it, but I'd almost wish that there was some sort of probably oversight to how much because that's really driving a lot of buyers out of the market. I mean, because you think about that example I told you about earlier. Somebody that bought a $340,000 house in Texas for cash, there's a very good chance they're not living in that house, right?
Yeah.
Because, I don't know, they got $340,000. That's just liquid. That's the person that's buying $1 million house probably, typically. So that's a corporation, or that's an investor with a lot of money. So, that starts squeezing out the people that are, looking first-time home buyers, millennials, and things like that, trying to get into the industry. So that's made it a little tough. But I think over time too, I think a lot of the, like my friend, she started getting more aggressive on each offer that she made, more aggressive. She had some money put aside for a contingency if the appraisal didn't come in by bidding over list, but not enough to cover 275 up to 340. But in this case, the one that she did, she was about she did 20,000 over, and it actually appraised. So so that was good.
They just got to stay in the fight long enough. That's it. They got to stay in the fight.
And you get some people get frustrated. I've had people pre-approved for a year that haven't found houses, and it's that's where I think you guys come into play a lot too, where you've got to keep your marketing together, keep your social media up to date. Be retargeting those people. Yeah. It's hard, and I've really been investing. As the refis have kind of gone out and pipeline's down a little bit, although it's starting to climb back up. Really been investing in getting back involved in my CRM. Switch CRMs recently. Have a lot of automation to stay in front of those clients, because that's another thing. If you got people and it's taking sometimes 6 months to find a house, there's a really good chance you could lose those guys along the way if you don't stay in front of them. So that's another big focus of ours has been, what some of the things you guys are doing, and just having a big presence on social media.
Yeah, and just because you hit the nail right on the head, why don't we talk a little bit about how is social media maybe playing a role? Obviously us working on your social and really your online presence. How's that played a role overall just in the mortgage industry? I know the Rocket Mortgages, these guys that are massive that, they know they need to market and they got to have the marketing budget. Like how are you seeing that play maybe a shift between the big and the small guys,
I think that the small guys have a chance to compete a lot better, and because of social media. There's things I like about it, things I don't, but at the same time, I think there's short term and there's long term. There's the branding long term. There's the short term, buying leads and running ads and things like that.
Yeah.
But I think right now, and what I've been kind of focusing a lot on is we've gone from 200 followers on Instagram up to 1,300 or something. But that's mainly we have a really good following as far as realtors and stuff like that. But I think, staying out in front of people, especially realtors, doing a lot of education, bringing value to the table is huge. And I've got a couple of deals in the pipeline from people that liked my marketing, that were realtors that said, "Hey, I'd like to work with you. Let's send over some." They sent me a couple of clients. I've sent a referral back to them, and
that's awesome.
I think that's big, and I don't know. To me, I'm big on Instagram right now, and I think that if you can have a good presence and be professional, know what you're doing, and have your page, your profile look good, I think that's becoming a kind of a foot in the door to get in with a realtor, because I think everybody's wanting to kind of improve on their social media game a little bit. And some of them don't know to go to a company like you, or they may just have questions. So I get a lot of questions, in my DMs on, hey, who are you guys using? Or are you doing all this stuff yourself? A lot of people I used to work with in the past, they're like, hey, are you doing all this? I like what you're putting out there. And, I really do think that, if you can let's say a listing agent on one of these transactions we're about to close, we're doing an awesome job getting loans closed in a couple of weeks, basically communicating along the way. I'm sending the listing agent video updates with what's going on the transaction, blowing their mind on it. And then, you follow them on Instagram, they follow you back. They're like, wait, this guy's getting loans closed fast. Their rates are really good. And they've got a really good social media presence. This may be somebody you want to work with and be able to glean, information off of. So
that's awesome, dude. What as we kind of start to wrap things up here, what is the perfect client look for you? I think it's a good way for people because then so many people don't even know, right?
Yeah.
What does that look like? Before I even pick up the phone, a lot of people I think just don't know. They don't know to pick the perfect client for you. What are the boxes when someone calls you? What are the boxes you're going to check off to know you're a fit for X product? What are the first? Because I think it's good for people to hear because they're like, hey, my credit score is X, and I've worked at my job for 2 years, and whatever it is. What are some of the basic stuff for the people that just don't know?
Yeah, so it's funny you say that because we get a lot of calls, so we rank organically very high in Google. So I think if you search mortgage companies in Fort Worth, I typically am going to pop up in the top 3. So I get some inbound calls from these exact folks that you're talking about. And those are really good leads because those weren't people that saw an ad on Facebook and they were on Facebook for entertainment. And then they see an ad and click on it because they may have a 480 credit score. They're like, but I want to buy a house, right? So ideally, when somebody calls in, I want to talk to anybody because even if they've got a bad credit score, we will kind of put them into a program to try to get them, hey, what's your plan? This could take you 2 years to get the scores up. But the ideal customer here, if I could get this call every time, I would take it. Hey, I've got a 780 credit score. We're selling our house. So we've got, $300,000 to put down on the next house. We want to buy an $800,000 house. And we get some if somebody, if first-time home buyer, they have a ton of equity right now. So you got assets and down payment covered, right? So then the second question, what's your credit score? 801. Okay, boom, we're done there. What do you do for a living? I work at Lockheed Martin, which is down the street. I'm an engineer. And I know when they say that, they're a W-2 employee. They probably don't get a ton of commission and bonuses. They make $200,000 a year. That's an approval immediately. And that deal's going to get done real easily. So, but at the same time too, if we're looking, for a first-time home buyer, sometimes it's the calls come in and it's I've got a 620 credit score, and the next question is, have you saved up for a down payment? And hopefully they've got some money saved up a little bit by the time they're making the call to us, and then most of the people that are shopping do have a job, but if somebody calls me and they're 620 and above, I typically think we're going to have a really good shot at getting them done. We can do FHA down to 580, and then really to 550 if they got 10% to put down. But the lower credit scores, then you start kind of wondering, okay, how much do you have for a down payment? And, are you going to qualify and things like that? But there's ways to get the scores up, and we work with folks on that as well.
Well, that's awesome. And that's a simple question, but sometimes I think some people just don't know, right? They just do not know to pick up the phone. And now if you're someone who's thinking about reaching out to an agent, right? Like I'm thinking about buying a house, right? Right. Yeah. What do you recommend as the first? Do they call you first, or are they calling a real estate agent first?
They might as well call me first, because in this market, especially, the real estate agent's first question they're going to ask you, hey, are you pre-qualified or pre-approved? So if they're not, that agent doesn't want to go show them houses. I mean, it's just bottom line. So they know how hard it is to get a house right now. So if you go spend the day with somebody that's not pre-qualified, that's time is money for those agents. So I think somebody wants to start with a mortgage company. There's nothing better than when we get the calls in off Google from reading our reviews. They're like, hey, we want to buy a house. And we go through those 3 questions: credit score, assets, debt ratio. And I'm like, I know they're a slam dunk. Hey, are you working with a realtor? No. But then talk about the ideal customer. that's the ultimate for me, because I'm just not the guy that goes and knocks down realtor doors and brings donuts and coffee. I'd rather bring them an actual deal, right? So if I can get a pre-approved buyer and bring that to somebody that sent me business in the past, or even somebody new, that there's nothing better than that. But they absolutely should start with getting pre-qualified by a reputable lender, and not even just pre-qualified. I'm getting most of my buyers pre-approved now, so we get documents in, actually run them through underwriting, so that there's no chance that we're not going to get the loan close at the end.
That's awesome, and great answer. That's a great clip right there. Let's wrap it up. What's one piece of advice, last minute words of wisdom you have for anything you want to talk about, whether it's a potential client in the future, the market, a potential loan officer walking in the door? What's one or two tidbits you want to leave everybody with?
I think a lot of question right now is, should I wait to buy a house? I'd say no. I just, like I said, values are going to continue to go up. Some people are saying, I don't want to buy because rates are too high. Well, that's not a bad time to buy necessarily, because let's say you're buying a $375,000 house right now. I think there's a good chance a year and a half from now, 2 years from now, $375,000 house is going to be 4.25, possibly even 4.5, the way things have been going with this housing shortage. If you don't like the interest rate right now, you go ahead and buy the $375,000 house at 5%. There's a good chance maybe 2 years, 3 years down the road, rates are going to change again and go back down, and then we refinance you at that stage. So at least you got the house for $375, and now you're not looking at going to buy. Hey, rates are a little bit better, 4%, 4.5%, but now the house that I could have got for $375 costs $450. So I would say if you really think you're going to buy a house, I would be in the market now, and I would be aggressive. I talked to some of my agents, some of the pre-approved buyers that we have, and they're not making offers over list price. And it's just like, it's not going to get accepted right now. I mean, if it's a house that's been sitting on the market for some time, then we know there's something wrong with the house, or it's way overpriced. But if you're just out making offers right now and think you're going to get a steal, my advice to you is you're not getting a steal right now. I mean, the steal is going to happen when you look back on it 2 to 3 years from now, and you're like, wow, I got a steal. Yeah. But you may not think that it is right now. You got to get aggressive right now.
Yeah. I love that you said that, right? Because it's never a good time, right? And you don't know what's going to happen. So exactly. Darrin, thanks for being on, buddy. Until next time, we'll have you on again, man. If you guys are in the Texas area, please give Darrin a call at LoanFi Mortgage. He's kicking butt, and he'll work his best to get you the best interest rate possible. So until we meet again, all right?
All right. Hey, I appreciate it. Thanks a lot, guys.